Are we all ready and settled? I now call our meeting to order. A very warm welcome to the Hinckley Rugby Building Society. This is our 159th annual general meeting of the members. My name is Nemini Wynne Evans and I am your board chair here at the Society. I'm joined this evening by my board colleagues who I will introduce you to shortly, on all of whom are being presented for re-election today, along with members of the Society's senior management team. We also welcome Emma O'Flaherty from Civica, our independent scrutineers, who you would have met when you came in, and she will be ensuring that the voting process is conducted properly today. And additionally, we're also joined by Yukai Maruza from Mazars, who is our independent external audit firm. Please note that the meeting is being recorded, just here, and a copy will be available for viewing on the Society's website. And before we start, just a small housekeeping note. In the event of a fire alarm, please make your way to the nearest exit, which is going to be that door that you just came through, and our staff colleagues will show you where you need to go. But hopefully our evening should be fairly straightforward. So this evening's agenda is as follows. Thank you, Amy. Wonderful. So I'll start with just a few remarks and an introduction from me. We'll then have a review of the year from Barry Carter, our Chief Executive Officer. We'll then proceed to our formal AGM business and voting, including taking questions and answers on the report and account and on the resolutions. We will then have a reading of the resolutions and a vote. And then I will open up to a general questions and answers session for anybody to ask us questions on anything today. And we have some other questions sent in from members beforehand as well. Then I will read the results of the vote and just make a few remarks at the end, and we'll be done. So bear with me. As we move into our formal business of the evening, I'd just like to start, as I said, by making a few opening remarks to set the scene today. It was with great pleasure that we presented to our members the annual report and accounts for 2024, which were sent to you in preparation for today's proceedings. And for me personally, this was also my first year end as your board chair. You will start to hear a little more today and over the coming months about how we're preparing to celebrate what's actually the 160th year of your Hinckley Rugby Building Society. And it's when we reach a milestone like this one that it brings into sharp focus how carefully we manage your society, not just for the benefit of its members today, but as stewards and custodians of a significant history behind us, and with an eye on the needs of the future generations of members to come. The year just gone really has been quite a year for your society, as well as for the business backdrop in which we have been operating. At the start of 2024, if you can remember back that far, the Bank of England base rate was the highest it had been for over 15 years, at 5.25%, and soon the UK general election and the autumn budget statement loomed ahead of us. By the end of the year, interest rates had come down a little to 4.75%, but had not fallen by as much as had been widely anticipated. As you may be aware, the Bank of England's Monetary Policy Committee subsequently lowered the rate to 4.5% in February 2025, but decided this month in March to leave the rate unchanged for now. As a result of the prevailing factors I've just outlined, it was a year which at times brought periods of great uncertainty, and no more so than in the households of our members, as you all took decisions on how best to manage your day-to-day finances. It's at times like these that the stability and the continuity of your building society never wavers, remaining true to its founding principles. We have continued to support our borrowers, still bearing higher repayments than they have previously been used to, and our savers, who are seeking strong returns on their money at a time when the impact of recent high inflation is still being felt. We expect the uncertainty to continue during 2025 as the new Labour government implements changes to policy, and I say this as, of course, we await what the Chancellor's spring statement may bring us tomorrow. The government announced one specific change in its autumn budget statement relating to stamp duty on house purchases that will impact first-time buyers and those purchasing a second property from April 2025 in just less than 2 weeks' time. And this will impact lending volumes in these sectors during the financial year that we are now in currently. And our team have been working hard to support those buyers who have been looking to complete in time for the end of the current tax year. Our support for our local communities in Leicestershire and in Warwickshire has continued unabated this year, as has our support for colleagues, whether they be based in our home counties or further afield, on whom the delivery of our service to our members depends. They continue to put you at the heart of everything they do and strive every day to deliver to you the best service they can, whether through our branches or through our other service channels. Now, you may have noticed that we took on a different look and feel this year, as you can also see in the annual report you've received and our surroundings here in our head office today, with our fresh new branding keeping us fit for the future and beyond. And you may also have started to interact with us through new digital channels, and while our commitment to our branches remains unwavering, we do need to ensure that we stay relevant and available to all of our members and potential members by delivering our service offering. I was hugely impressed by how our team delivered the final stages of our digitalisation project this year on time and on budget, enabling further mortgage and savings enhancements and the introduction for a first time of a mobile app. They have shown a level of professionalism and a commitment to avoiding disruption to your service, of which I believe you can be proud. This has also been a year in which new financial services regulations from the Prudential Regulation Authority and the Financial Conduct Authority have continued to keep us very busy. You may have read and heard about how we have continued to rise to the challenge of the Consumer Duty, which has been introduced to effect a fundamental shift across the whole of our industry towards delivering good customer outcomes. Our team have continued to work incredibly hard to improve your member experience when you interact with us. The board of your society has now settled into a new composition as I stepped up to the board chair position following the AGM in March 2024, following our Chief Executive Officer, Barry Carter, who took up his role at the start of January 2024. We said our final goodbyes to those non-executive directors who were leaving us at the end of their term, and I'm delighted with the experts that we now have round our board table, supporting your society with their deep knowledge across a wide range of business fields. And I'll take a moment to introduce our directors to you now. So to my left, Barry Carter, our CEO, John Mulvey, our Chief Financial Officer, and if our non-executive directors can just make themselves known. So I have Linda Blackwell, Barbara Taid, Tony Alexander, Maimola Pafani, and John Lowe, all of whom are up for re-election today. The year currently and ahead for us will be all about building on the foundations that Barry laid for us in 2024, continuing to focus our range of mortgage and saving products to appeal to current and potential members while serving all of our members to the best of our ability. Thank you very much for your interest in our society and for your continuing support. And I would also like to thank all of our staff and my fellow directors for their hard work and commitment to progressing the society's strategy during the year. That's quite enough from me for now. So I'm now going to hand over to Barry, who will provide you with his review of 2024. Thank you.
Thank you. Let me just get myself settled here, if we will. Thank you. So, look, thank you, everybody, for joining us this evening. Thank you for your support with AGM. Thank you for the votes. And also thank you for the year that was 2024. Amy, next slide. So 2024 was my first year as the CEO, taking up the reins, as Emily mentioned, in the early part of January. And before we start getting into some of the updates throughout the year, I want to just take a little pause on this slide, if you would allow me, please. So when you came in this evening, you might have seen a big slogan on the white wall that was there. And that's very purposeful. It's about everybody that walks through the door has been quite clear about what we intend to be as a building society, as a savings and a mortgage provider. And as I came into the job, I wanted to just take a little step back and ask everybody, what is it we are here to do as a building society? To be very clear about our purpose, what we want to become, our ambition, and the values and the way that we do it. And what you see on screen is both our purpose and our values, and I'll talk a little bit about our ambition, which is all underpinning our objectives for the year. Very clear, we are here to support our members and our communities to create a better financial future for themselves. And that is underpinned, that purpose is underpinned by our 5 E's, the values that we have, seeking to be efficient, engaging with our members, being ethical in the decisions that we make, displaying excellence in all that we do, and having the relevant expertise that we need to do our jobs. Now, some of these values that we have are still aspirational, and I'll talk through this 5-year plan that we have that we're at the start of it. 2024 was the first of those 5 years in our plan to get us to 2029. Thanks, Amy. So let me just chat a little bit. You might remember that I flashed this on screen last year. Our 4 objectives, our 4 strategic objectives for our business over our 5-year plan: to achieve growth, to have great customer experiences and customer focus, to have a people learning and community focused business, and to seek to be efficient and effective with our business, what we're doing. So let me just talk to the first of those, growth, Amy. Thank you. So growth, we're very clear the objective of what we want to be is to create a sustainable financial business, grow sustainably, and a 5-year plan to having 1 billion of mortgage assets and generating a profit of 4 million. Amy, thanks. So I want to just spend a couple of minutes on some of these slides and what's in our annual accounts, just a couple of extracts. So if I start off by a savings and a mortgage business, it's very clear that our savings business needs to grow. We fund our mortgages by our savings deposits. In fact, this slide that's here, as you will see, we have been growing. In fact, in 2024, our savings book was the highest it had ever been in our 159-year history, 160 years this year. And that's positive. It should always be. We should always be seeking to grow our savings book. But what's very pleasing about that is if you notice the difference between the yellow and the grey, we've grown our savings by retail deposits. That's the deposits that you bring in through our branches, through our postal accounts or existing accounts that you're now funding online as well. And in the grey part, we've shrunk our TFSME funding. That is wholesale funding available to us through the Bank of England. Funding that many financial institutions have used, but in fact, that funding comes to an end at the end of this year. And so you're seeing organisations seek to repay it. I was delighted in last year that what we're actually able to do was to go further ahead and repay more of our Bank of England borrowing than we perhaps intended, making use of some great products and great services that were out there. And that's meant that largely we're able to fund our mortgage book through the retail savings deposits. And we'll continue the repayment of that, remaining 12 million over 2025. On the other side of the balance sheet, our mortgage book, the yellow again representing the growth in the mortgage book. Now, the positive on this is that the mortgage book is back over 700 million, the first time that it had been at that level since 2008. And 2008 is obviously clearly a point where we would all remember in financial services. So it's taken a long time to get back to this point, but I'm positive in where the growth has been. Now, if you take the statement that I made about being a 1 billion mortgage asset base and a 4 million pound profit, you will quickly see that actually the level of growth that we're achieving needs to be greater. We achieved roughly about between 2.5% and 3% growth last year against a plan of 5%. So you can quite quickly, clearly say we didn't achieve the full level of growth that we needed. A couple of reasons for that. It was an intense market in the first place. Memory outlined some of the headwinds that we had. And secondly, very honestly, it takes a time for a business to transition to a new CEO, a new ownership, a new leadership, and everybody to adjust. And it really took to us about April of last year for us to find our feet and find our pace, but we did. And in fact, we ended the year on a very, very positive trajectory, and we started the year with quite a lot of pace as well. In fact, we're slightly ahead of where we intended to be at this point. So a bit of a mixed bag. We're very positive in the sense that the savings book is the highest it's ever been, and that the mortgage book is back over the 700 million mark, but with more to do on that. Amy, go forward. So what do we do with that 2% that we left behind? Well, we bring it forward. We include it over the remainder of the plan over that remaining 4-year period to take us to 2029. Now, the impact of that falling short on the growth in the mortgages, we're slightly behind on profit from where we intended to be, slightly behind of last year, but there was a couple of one-off exceptional costs in there. So I'm not going to stand in front and say that we're delighted by that. We know we need to grow that. We've got a plan. And in fact, our growth and our target for this year is to be over £2 million of profit. And we are delighted to say at this point, we're well ahead of where we need to be at this point. So again, making up pace for that sort of slower start to the year. But very positively is this net interest margin. That is the difference between what we charge our borrowers and what we pay our savers. And it's important to us that what we do is we pass on the benefit to our savers, and we don't pass on the full burden to our mortgage customers, i.e. that we make it affordable for them, but we can still charge a rate that makes it profitable for us and beneficial for our members. We continue to grow that. We continue to get that in a positive trajectory. So I'm pleased that despite the fact that our growth was slightly less than what we intended it to be, we're still in a very positive direction at that point. At the same point, we've still been able to reduce 300 grand of cost out the business, and we've still been able to maintain very prudent levels of capital and liquidity in the business. So we finish the year in a very positive trajectory, and we start next year with also a very positive trajectory as well. And we'll probably take some more questions, and I'll invite John in for some of those questions later on if you want to have further. The next strategic objective was to talk about being customer and customer focused, a real focus on the member. We're a mutual. You own this organisation. We're the custodians of it. It's about making sure that what we're doing is driven by your needs. And we wanted to proactively engage with you. We wanted to understand your needs, and we wanted to make sure that you really felt the business and have a focus as a customer focused business. I'm not sure if any of you would know these numbers, but we have roughly 45,000, certainly at the point when we produced these slides on the annual accounts, we have roughly about 45,000 savings members and just over 6,000 mortgage members. Again, as an organisation, we intend to grow. We intend to grow those numbers. We want to attract more savings customers, and we'll talk a little bit more about our digital offering and complementing the branch offering. But we need to grow our savings book as well. We need to grow more savings mortgages, mortgage customers. The little strapline at the bottom pleases me. We'll do that through putting the customer needs, preferences and ambitions at the heart of everything that we do. So over the past year, we've been really thinking about what does it mean to be a Hinckley Rugby member? What's the benefit? What are we thinking about? We've identified 5 kind of customers types, customer personas, if you will, ranging from Chloe Johnson, who's starting out in her journey, savings or as a borrower, right the way through to John and Margaret Wilson, who are seeking that later life freedom. We don't have one Hinckley Rugby customer member. We have 5. And our job is to make sure that we provide services, solutions, products that meet their needs. And as the diagram shows, how we do that, we listen to their feedback. We improve the customer experience to address those pain points. When you interact with us, it's not about dealing with the branches, dealing with savers, dealing with mortgages. You deal with Hinckley Rugby, and you expect to deal with Hinckley Rugby. We can respond and give products and services that are based upon those needs. And as your CEO, my job is not to create a revolution. It's to evolve the process. It's to evolve the offer, and it's to continue to do the things that are great about Hinckley Rugby, but to make sure that we're still relevant and still relevant for a future customer. Thank you. The next strategic priority was about our people and community. And normally at this point, we would have maybe a couple of people that were from charities that we've supported. And you'll notice this evening, it's very much more about us internally as the business. And that's by design. Wanted to really focus about what we've been doing throughout the business this year. That doesn't mean that we haven't been focused on the community. In fact, there's still lots of great work that's gone out there. You will see it over our socials. There's lots of publications, and then we've returned quite a sum of money to various charities that we've supported as well. But I really wanted to focus on our people. So up here, you will see we've got about 160 colleagues at any one point in time, colleagues that make our business great. This year, we've been really focusing about providing an opportunity for them to thrive. I'm delighted that as a regional building society, we can be a local employer. We can attract talent. We can give people a job. We can give them a career. And believe me, in this market, when it's a facing of digitisation, artificial intelligence, people being replaced by systems, we should feel proud as a society that we have our people. Our people are our best commodity. Amy. So part of what we've been doing throughout the year has been recognising capabilities, recognising achievements and awards. And we introduced our Values Vanguard Awards winner at the latter part of last year. And again, you'll notice our 5 E's, not just a strapline. How do we bring our values to life in what we're doing day to day? So we introduced this, and perhaps what's most pleasing is this is an opportunity for colleagues to recognise colleagues. This isn't about me saying somebody's great, somebody's done this, or whoever's the flavour of the month. This is colleague recognising colleagues, building capability, building positivity within the business, and bringing these values to life throughout the business and all that we do. Efficient and effective was the next strategic objective for us. And this is about reducing the friction points, the difficulties in the day-to-day of what we do. It's about making life better. I came into the society 3 years ago. I'm not sure I would have said it was efficient, and I still think there's an awful lot that we have to do. But I was brought in to help digitise us, to try and take those pain points out. Perhaps the most noticeable thing in delivery that we had last year, apart from the rebranding, was our digital delivery. As Nemini mentioned, we successfully deployed a digitization program, which really had 4 main things to it. One was a move to the cloud. 2 was to provide a savings front end. Secondly, is to give a mortgage front end portal. And 4th was to give the app for our customers. So those 4 things together really provide services to our existing members that are able to interact with us in a way that they haven't done before. They can bring the best of Hinckley Rugby at a time that suits them, at a place that suits them, but it complements the existing service. We've still got our 7 branches and 2 agencies. We'd be delighted to see you in those branches. We'd be delighted to hear more from you. It doesn't mean that we're forcing you down the digital route. What it does mean is that we can appeal to a different type of member and a new type of member. So we're match fit where we need to be on this stuff. We've had some comments and some questions we'll maybe cover off. The focus for this year was really to deploy digital. We know there's more functionality coming. So you'll be able to open accounts, you'll be able to close accounts, you'll be able to switch products as you go on. There's more developments to come on this. But from a standing start a year ago, by the end of this year, 2025, 7,500 members will be signed up to digital. That's a significant shift. That really is a significant shift for a building society of our size. And that still means that they can still use the branches, but they can interact with us in a different way. So we should feel really, really proud about that. And in fact, in the wider sector, we're a bit of the poster child for how to deliver this on time, on budget. So we are feeling particularly proud about this part, Amy. But it doesn't stop and start with digital. We know there's lots of different things that we do, whether it be asking you for lots of different identification, sending out bits of paper, being difficult to deal with some of our processes. We continually have a book of work where we're looking at processes and procedures that we can improve based upon customer feedback, member feedback, based upon the best of breed outs out there. We're seeking to remove these. And in fact, we actually offer an opportunity via the Ideas Forum where colleagues can recommend to make their business better. Really pretty autonomous stuff, right? Stuff that's really encompassing and asking for people to make our business better. So that's the year that was in our 4 strategic priorities. I want to just, if Amy can please load up the video, just chat with you, if 2 minutes of this video, and then I'll chat with you about looking into 2025. Please, Amy.
Today, 160 years from our beginnings, our building society stands as a bridge between tradition and innovation. We honour a purpose that has guided us through every merger, rebrand and technological leap, remaining committed to the people who make it all possible, our members and our people. As we look towards the future, we continue to evolve with our ambition in mind, to have a positive impact for our members, our communities and the environment, of growing a sustained financial performance to provide security for our members. We are here to deliver our highly valued personal service, whether that's through our high street branches, on the phone, or via our enhanced online services. We are here to maintain our support for our local communities and deliver focused initiatives which draw on the knowledge and expertise and add tangible value where it's needed. We are here as a champion for the environment, working to reduce our own carbon footprint whilst helping our members make their homes more environmentally friendly and efficient. We are here to help you succeed. We will reward your dedication to continuous improvement with a commitment to nurture you and provide opportunities for you to develop and thrive. We are here for you. We are Hinckley Rugby.
Great stuff. Thank you very much for that. And I should say that that was some expert work that was produced in-house on that. It's quite interesting just to see that little sort of timeline just as you go through with some of the different looks, feels, brands. But we're very clear. We are here There's no reason that we have to put this in this way. We are here physically, and we're here for you as a building society and a savings and mortgage provider. So let's have a little look into 2025, Amy, thanks. So firstly, as we mentioned, our 160th year, quite a milestone. Again, I really take that very seriously. I'm a custodian of this business. It's really, really important that we set this in, that I continue this business and find it in a different state, but pass it on in a better state than we've had previously. It's the job of anybody that comes in that they always pass the business on to the next person in a better state. And that's what our objectives look like over our 5-year period. It looks exactly the same as the earlier slide with one addition. So we're still focusing on growth, that we will achieve 5-year plan, £4 million profit, 1 billion of assets. We're not a profit-driven business. It's not in the same way that as a shareholder, but it's important that we make a level of return that keeps us sustainable, that we can reward and invest back into the business, that we can get the right balance between charging our lending customers and rewarding our savings customers. We need to make a level of profit that keeps us relevant and allows Hinckley Rugby to continue to be a sustainable business. We've included risk management, so we're entering into different areas, things like our online banking. It opens up cyber with things like artificial intelligence. There's a lot of things that are happening in this world. It's a strange world at this point. It seems right that we continue to strengthen, focus our capabilities and risk and safeguard the business. Customer experience, I cannot be more clear. This is your society. Our focus is to continue to be really, really member-centric, really to iron out those difficulties that we've got in our processes and give you great, excellent outcomes for our business. People in community focus, we still want to be a really engaging place to work. We want people to be happy, we want them to really thrive in this place, continue their careers. In fact, we want the next generation to come through to continue the journey and be the next leaders within this business. And efficient and effective. That's a race without an end point on it. We need to continually keep up to date and remove those friction points in our business. But 160 years, we're going to celebrate various things that will happen. You will see through our £160 draw that are going out. We've got 160 year celebrations that also include members lunch as well. There's quite a lot that's going to come out on this one, so we'll talk to you more about that and we'll update you for future. But for just now, that is the year that's been. Thank you very much. Thank you.
Let me ask a question. Excuse me.
Please, yes.
Where do you think your growth is going to come from?
Sure.
Not a silly question. I mean, Rachel from accounts can't get growth.
From accounts, yeah. So,
Are polite to.
yeah, you could have used many others there. So our growth in our mortgage business comes through. We are providing more niche lending than perhaps maybe we would have on some of the high street. We're predominantly focused on providing mortgages for people that have got complex income. So people like small, medium business owners, which are traditionally in the high street, difficult to get mortgages from. We're still focused on the buy-to-let market. We're focused on the self-build market. We're still a lot of focus in areas now. We're still finding people very, very keen in the mortgage market. In fact, if you look at the volumes that are coming through, obviously driven by the stamp duty rises at this point in time, we're about to have our highest level of advances this month than we've had in our entire history. So the growth is there. There is absolutely opportunity that's there. Savings remains the challenge. Savings is difficult. There's a lot of people that's focused that are, as I mentioned, on TFSME looking to repay. And actually, one of the things that we need to do is to make it easy for people to open accounts, transact with us and have attractive rates with us. But we're still very positive in the UK property market. There's still a lot of areas and some of the expertise that we've built in the business over the last few years of offering services and mortgages to people that would otherwise be turned away by the banks is the area that we're looking for. In fact, one of our brokers that we have that gives us business is somebody that is referred to us when the banks say no. So that's the kind of areas where we're looking to try and build, and our underwriting, manual underwriting specialism is what's going to help.
Just seems that 30% increase in 4 or 5 years is a hell of a target.
Yeah, the books shrunk over that period of time. I mean, since 2008, as I remember, our mortgage book has been shrinking. So we could somewhat argue that we've been underperforming, or it could be just simply that, we've not maximised the opportunity that we've got on it. We know that the volumes of mortgage applications that are coming in and the areas that we're speaking with our products on it, we believe there's an opportunity for there. You shouldn't take that as it's easy. It's very difficult. It's not an easy market in the slightest on it, but we're positively encouraged at this point.
I live long enough to see that.
Thank you very much indeed for your question, sir. There will be an opportunity just in a few moments to open up the floor for further questions, and I very much hope that there will be more questions coming for our team. So we're now going to move into the parts of the meeting where you're going to be invited to vote, if you have not already done so, on the resolutions before the meeting. Before we move into the voting, could I ask if there are any specific questions on the resolutions themselves, so the formal business of the day, the annual report and accounts, the appointment of the auditors, the directors remuneration report, or the re-election of the directors, please? Yes, sir.
Can you tell us how long the current auditors have been the auditors?
So it's 3 years. It's
3
3 years, yeah. And the maximum permitted is 10 years. So we're quite early in that journey.
But you don't necessarily need to take it to the 10 years,
Yeah, we'll continually monitor it, but there are efficiencies to be had from not continually switching your auditor. So we're just starting to see those sort of in this last year of in the last year, we've seen some of those efficiencies and hope to get more in the next year or two. So it's not something you want to keep switching, but you're absolutely right. You don't have to wait 10 years.
No, but there are also efficiencies from getting a fresh pair of eyes.
Potentially, yeah.
Thank you for your question. Shall we now conduct the vote? Grace, would you like to come forward? Grace Tavenner is our company secretary, and she will be reading the resolutions being put to our meeting today. Thank you.
To the resolutions, you have the option to vote for, against, or withhold your vote. Your board recommends you vote in favour for all resolutions. Here are the resolutions laid before the members. The resolutions are as follows. Item 1, to receive the director's report, annual accounts and annual business statement, and the auditor's report for the year ended 30th of November 2024. Item 2, to consider an ordinary resolution to appoint Mazars LLP to hold office as auditor of the society until the conclusion of the next annual general meeting. Item 3, to consider an ordinary resolution to approve the director's remuneration report for the year ended 30th November 2024. And item 4, to vote on the election and re-election, the re-election of directors, to re-elect Nemini Wynne Evans, to re-elect Barry Carter, to re-elect Tony Alexander, to re-elect Linda Blackwell, to re-elect John Lowe, to re-elect John Mulvey, to re-elect Manuela Fafani, and to re-elect Barbara Tide. For those of you who have voting cards, if they are completed, would you like to hold them up, and myself and the independent scrutineer will come and collect them, and we will add them to our tally. Give it a few more moments. Are there any more? Any more votes to take in? Okay.
Okay, thank you. Thank you very much indeed, Grace. That concludes our voting, and our independent scrutineers will now be doing the final tally, which I will read out shortly. In the meantime, we are going to open up for general questions and also address questions submitted by members in advance of the meeting. Now, we've had quite a few members submit questions in advance this year, about which I am delighted. So what I'll do, if you'll forgive me, is I'm going to start by just reading through the questions that have been submitted, which Barry and John will answer. A huge thank you to everyone who did submit questions in advance, and Barry will be responding individually to everybody who has been in contact with us. Once we have run through those questions, I will then open up to the floor if anybody else has any other questions that they wish to put to the Society's management team today. So Barry, I'll start with our first question. Are you planning to close any branches?
No, we have 7 branches and 2 agencies, and over the last year, 2024, as we've done our rebranding, you'll have seen that we've actually updated some of the look and feel of the branches, branch colleagues, new uniforms and the likes. We're very committed to the towns and communities that we are servicing. We're also looking at the opportunity to do things like pop-up branches. That's was part of our digital investment will allow us to do that. No, for just now, there is no plans for us to close the branches.
Thank you, Barry. And a related question, coming from somebody who cares particularly about one of our branches.
Yeah.
They say, I'm a pensioner and I have £60,000 worth of savings with you, which I'm using for my retirement, and I really need access to the Colville branch. Please tell me that you have no plans to close it.
Yeah, well, look, firstly, thank you for being a member with us. Thank you for trusting us with that money. That's really important to you. Absolutely no plans to close Colville. In fact, Colville is one of the areas where it's had a regeneration out in the market square or the market area. And I'm delighted, actually, our positioning is really good. It's actually attracted some talent on it. We've got a very capable team in there. They're lovely. Please, I would love to continue to make use of it and see how we can help you.
Thank you. I have a question about interest rates. One of our members wants to know, why are our interest rates so poor in comparison to other providers?
Do you want to take that one? So look, I'm not sure that I see that. In fact, actually, 2024, a lot of our products, we had several products that were in the top tables, the top buys, and we were quoted. In fact, in the previous year, we were quoted at Martin Lewis as well as having some outstanding products. So look, different products for different solutions. I think the best advice that I can give you is meet one of our people in branches, chat with us. What products are you needing? What is important to you? As I say, we have had some very, very good products out there that have had some market leading rates. So if you're feeling like the rates are not the best, then I suggest you maybe come and have a chat with us and see how we can help you.
Thank you. One of our members has asked, why can't I open savings accounts online, and why aren't there more self-service options?
Yeah, that is a great question. And so I showed earlier on the slide about the sort of what you can currently see, whether it be on our app or whether it be on our front office portal. But the focus was for us to deliver digital safely, cleanly, on time, on target in 2024. We've done that. It was a new offering to many of ourselves as members. We didn't know how it was going to land, and we wanted to make sure that we were doing it in the right way. We know throughout 2025, there's a number of different developments. So that includes things like account opening, but it includes things like switching your accounts, closures, and the likes as well. So that functionality is coming, but we're building the capability as you folks are building the knowledge on it as well. And we want to do that as a partnership.
I have another question around our capability and our service offering. A member would like to know, are you going to change the tortuous method of transferring monies to you, i.e. the fast track payment scheme? Are you going to join?
Yes. So yes, tortuous. So I think there's a couple of parts to that. Firstly it is quite onerous in time, but also it's cost money to send monies. So whether it be a check that's inefficient, it takes time, it can be lost, there's a clearing period from it, or whether it be through CHAPS payments, it costs money. So there's the ability to do faster payments with ourselves. So if you have a nominated bank account that you use, you can send monies to that via the faster payment route, which is available between 9 to 5 and Monday to Friday. So we are live with that just now. Again, if you're feeling like it's tortuous and you're not getting the service, come and speak to us, talk to somebody. We'll happily guide you through that new payment process.
Thank you, Barry. John, I have one for you now, if I may. We have a member who would like to know, have all our employees been paid the minimum wage?
So yes, they've been paid at least the minimum wage. So there are two levels of statutory minimum wage. So there's the national minimum wage, which we pay to staff below the age of 21. There's then the national the national living wage, which is paid to staff 21 and above. And we actually pay as a minimum what's called the real living wage, which is set, which is above both those two minimums. And it's set by an independent third party called the Living Wage Foundation. And it's about £2,000 a year more than those other statutory minimums. And it's designed so that it pays people a decent standard of living. And the reason we pay it is to help us attract staff, employees with the right skills that we need. So it just helps us attract new staff, but it's also the right thing to do to pay the real living wage rather than those statutory minimums.
Thank you. Stay on your feet, John, don't sit down. I have a member who would like to know, how much did the society spend on our rebranding?
Okay. So we tried to, when we were doing the rebranding, we tried to do it as cost effectively as possible. So as Barry mentioned, we tried to coincide it with the launch of all the new digital services, particularly the online savings and the launch of the app. Our branches also were due a refresh, redecoration on the outsides particularly. So we timed it to coincide with the launch of the online savings and the app, and we spent £20,000 with a design agency to design the brand. But then after that, we did all the further development of the brand. As Barry said, you know, all the designs you've seen on the slides, the video, for example, that we did, we've got very capable in-house team. So all the further development of the brand was done in-house. And then as we've rolled it out across the society, including the branches, that was work that we were going to need to do anyway in terms of redecoration. So we've really kept the cost of it down. So £20,000 was the main external cost of the rebrand.
Thank you, John. Barry, I'm coming back to you now. A member would like to know, when will the opening hours become more reasonable and more like pre-COVID hours?
Yeah, so it's an interesting one. It probably ties into the question about, are you closing branches? So we committed, we're not closing branches. But what we have seen in the towns and the villages that we've been that we're present in is a decline in the footfall. So we had post-COVID been opening between sort of 9 to 2 o'clock, and that's predominantly been customer facing time. And then we've been using the time from 2 to 5 o'clock to do a number of in-house tasks. We're going to change that slightly. And in fact, from April onwards, we'll be launching our customer savings reviews. So from 9 till 2, we'll be able to offer the time whereby customers can simply walk in as they want. But between 2 to 5, we'll be having appointments to meet customers, members, chat about their savings, review their circumstances with them, and discuss how we might be able to help them. We continue to look at the operating hours. I don't think anybody really knows what the high street looks like 2, 3, 4, 5 years down the line at this point in time. But we continue to look and see how it might evolve for them. And indeed, if that means that we have digital offerings that complement that, we'll continue to look at that for just now. So we'll still be remaining committed to the high street.
Thank you. I have a member who would like to know, could we consider a members' council to allow selected members to consider savings and lending products, say one that met quarterly?
Yeah, I mean, listen, great, thank you. So we put a slide up earlier on, it was talking about how we engage with you. In fact, it's one of our values. We have a members' council. Actually, we have met on several occasions. Been a bit one-way traffic. It's been a bit difficult to get the interaction. So we took a revising under Danny as the Chief Customer Officer and Cheryl as Director of Operations to engage with members, with brokers, with our introducers, in a number of different ways. So we meet continually with different types of members to get feedback on what's going on, what we might have to do. But if somebody's interested in being part of a member panel, we can have the feedback. I would personally love to hear from you because it'd be great to have you involved in that. So please do. We'll get the details on that one, please. We'll contact them directly.
Thank you. John, I'm coming back to you now. The question from the member is, do you think you are claiming too many expenses?
John, personally.
So depending on what the question is about, if it's about directors claiming expenses, the only expenses that we claim are direct costs that we incur in carrying out our roles. It's mainly travel, subsistence, that type of thing. So no would be my answer to that. If it's about directors' fees, we benchmark all the directors' fees externally. So you know, we're very comfortable that we don't feel we're being paid too much. If it's about the society's administrative expenses more generally and sort of in total, we do a benchmarking exercise against other societies. If you compare, if you calculate the expenses incurred in the year as a percentage of our assets that we have, and you do that for all the societies, we actually compare very favourably. We're below the average of that metric for societies below £1 billion in total assets. So we actually, are actually below average for that metric for others across the society peer group. So again, no, I don't think we do have our expenses too high.
Thank you, John. Last few questions coming through now. Barry, I think this talks to something that you were talking about in your presentation earlier. Do you think the society is efficient in its business activities?
Yeah, well, look, I think we wouldn't have efficient and effective as a strategic objective if I thought we already were operating effectively. We need to be more efficient. There are a number of different processes, a number of different things that, because we've always done it rather than the best way we could do it. I mentioned about the customer feedback, the member feedbacks and the customer experience forums that we've got. We're continually looking at things to try and remove those pain points. We're continually looking based upon feedback as to how we can make the journeys better. Digital helps us that, but we also have to try and do that in a respectful manner, because there's a lots of things that we might class as inefficient, but actually people still value and still want. So it's a bit of a balance to get both at the moment, but efficient and effective is part of our 5-year plan, and we will continue to look for opportunities to be more efficient.
One of our members says that they found the online portal to be very basic, and will we be introducing any new online functionality to hold, for example, previously posted account or mortgage statements and other communications?
Yeah, I think that's a fair comment. Again, we purposely brought in quite a basic offering because frankly, we wanted to deliver it in a correct way, an efficient way, on time, on budget. We know there's a number of developments that are happening, things like statements, things like, as I mentioned, account opening, closures, switching accounts, those things will come. We'll communicate these out, certainly with those that are digitally using at this point, because you clearly have a need for it. But I recognise the comment about perhaps some of the nice basic function. What's quite exciting for us is the functionality that's coming throughout the next year and beyond.
Thank you. Final question submitted in advance. John, what will the board be doing to ensure that people's savings are sustainably looked after in the future?
So taking that question slightly more generally about sustainability of the society. So Barry talked in his presentation quite extensively about all the ambition and why we have that ambition and what sustainability means. But just to sort of recap, we view a sustainable society as one that has good rates for borrowing members, good rates for savings members, but also that allows us to generate the return that we need in order to invest in the future, whether that's digital services that we've been talking about, whether that's maintaining the branch network, making sure we've got the right staff, being able to attract the right staff, retain them, develop them. So it's important we generate a good return. And as Barry mentioned, our ambition is to get that return that we earn from its current levels of last year, 1.52 million, above 2 million this year, and up towards 4 million. So that's how we are going to keep ourselves as a sustainable society.
John, thank you. A huge thank you to everyone who submitted questions in advance, and as I said, everyone will receive a personal response from the Chief Executive. I'd now like to open up to any further questions from the floor. We've already had 2 this evening, one about where our growth will come from and one about our auditors. Does anybody here present this evening have any further questions they would like to ask of Barry or John at today's annual general meeting? Go ahead, sir.
I'm sorry, I haven't tried your digital offering at all. So this is a blind question. But I heard you app with some emphasis. I worry about apps. For older people, apps are normally on phones, which means that they are difficult to read, difficult to see. So are you intending to keep a digital offering that will be available on normal computers, shall we say, rather than just apps?
Yeah, there's a few bits to your question, if you will. And listen, you don't need to apologise the fact that you haven't used it. That's the whole point. I know you're a rugby customer, so great that you still use the branch. So please continue to do that, and you get the service that you need from that. Goes a little bit to one of the questions that Emily mentioned. It is quite basic in terms of functionality. That's by design, because it should be simple to use. It should be quite easy to navigate. And the downside of that is it probably feels like there's a few features missing, but we're never going to be Monzo. We're never going to be Chase Manhattan, nowhere like that. That's not the role and purpose of us as a building society. On the app, the emphasis was probably just my Scottish accent, so apologies for that. But in terms of the desktop, yes, absolutely. So we have the savings front end as a portal. So what you can do via the app, you can absolutely do online. And indeed, there's some personalization that you can make that there, whether it be the size of the text or whatever, to try and make it relevant. But we will definitely have it. The app is referred to as a companion app. So what you do on the desktop, it's the same as the app basically replicates that, and we will continue to do that. Very mindful of basically making sure that what we have is digital as a complementary service rather than forcing members down the route of it. It's meant to be there if you want it, rather than the only route, which is obviously different to maybe some of the competitors in the financial services one.
Might I just, one small supplement, if you have, it's not already on your list of to-dos for it.
Yes.
I heard you mention that your staff have got a way of submitting ideas for improvement. You might want to consider putting that for the members to be able to submit.
Yes, absolutely. Yeah, it's a good suggestion. Part of the members forum that we have is part of that indeed we open something up, and you could send us a question, send us a suggestion, which is a good idea. Happy to take that one. Thank you.
Do we have any further questions from the floor? Sir?
My personal position is I'm retiring perhaps 1 to 7 or 8 years' time. I don't know what, but within that range. So the most cost-effective way for me to save money is to put it into pension because of the tax benefits for that. At the moment, I'm obviously there's what I put in my workplace pension is one thing, and they can take a certain amount of extra, and then I go to one of the big banks and put money there.
Yeah.
I cannot go to a building society rather than one of the big banks to do that. And I just wondered, you'll probably say that Hinckley Rugby is too small an organisation to engage in pensions, but would it be not possible for you with other building societies to compete against banks as a joint?
It's a very interesting point. Look, maybe rewind 10, 15 years ago, there was a number of societies that were offering introductions to IFAs, working with pension providers and the likes to do so. Going back to what is the purpose of a building society, to provide savings that fund mortgages. That's the core value of what we do on it. Also very aware in terms of advice, what's the right outcomes, everything of that sort. We are not the type of organisation that's best placed to deal with that side. I note the point that you make about it, just the sort of the challenges and the frustrations. But put simply, we are a savings and a mortgage provider, and that's what we are true to.
But I'm saying on that, in terms of you invest money in pension, yes, you can put money in. If you've got a pension that you're going to be drawing in 1 or 2 years, it might be beneficial for you to have that backed up by mortgage debt as opposed to on the stock market, if you see what I mean. So whereas the building society's money is invested in people's houses, that would be perhaps for someone in a certain stage of their pension that they would be happy to do that, accepting that they get a slightly lower return because of the time.
I think there's a couple of parts to the answer. Firstly is it's very much driven by your life and your life circumstances, which takes somebody that's going to be able to advise you throughout that life and what's the most appropriate thing for you. Building societies are predominantly more transactional in the way that they operate, and so therefore an ability to give you that long advice on what's the right thing, that's not our skill set. It's also, the second part to it is a very well trodden path through lots of different providers, whether they be IFAs, brokers, wealth managers, big banks, private banks and the like. There's a lot of people that are in that area. We just wouldn't be able to A, invest in that, B, do any sort of real market capability on it, or C, dare I even say, meet the needs of you. So I understand the point, but for ourselves, we're very much due to, unfortunately, for your perspective, just being a savings and mortgage provider, and that's where our focus is.
You must lose quite a bit of business then, I think.
Well, I think, do we lose it, or is it the business that goes to the most appropriate person? For us, it's about getting the right outcome and making sure the customer gets the right thing. We would not be the best place persons to do that, so I appreciate it. I'm not sure it's business lost. It's business we've never had, and there's others providing that service for us. So, thank you. I appreciate the question, though. Thank you.
Do we have any more questions from the floor this evening?
Yeah. One of the big ways that you grow your membership is by young people coming through.
Yeah.
And they go through school and they go through university, their first jobs. What do you feel about financial literacy in schools? How do you promote it? Martin Lewis is big about this.
Yeah.
What do you think?
So there's a few different parts to that. So I think, firstly, there is a moral obligation that we educate the next generation of savers and borrowers. But regardless if you're a building society, a bank, whatever, the likes of myself, the likes of my colleagues, it's our moral obligation to educate the next generation. Building societies in particular, I'm looking at Denise, who is one of the, I'm very fortunate to have Denise as my assistant, but Denise is also very highly committed to the community, and she does, along with other members in our branch network and other areas, we do financial literacy classes. So we attend a number of different schools, local schools, where we talk about savings, we talk about borrowing, we talk about the basic terms of what's involved in finance, money generally. I think it's imperative. It's really, really important. I think building societies have got that position that they can reach out to those communities. I'm really proud of the work that we do on this. I hope she doesn't mind me saying it, but Denise received an award, was it last week or this week, Denise? Just for her contribution on what she's actually doing to support schools in learning for financial literacy. So we have a place for it. I'm a big supporter of it. I'm delighted that we're doing this as well. So I completely agree with Martin Lewis in this instance.
Any further questions from the floor? Sir.
Two questions, one of which I had a conversation on the preamble here, but I feel as if it should be reported as part of the AGM. Your predecessor, Mr. Fife, started a scheme whereby he was looking at people who've got mortgages with older properties.
Yeah.
He got involved with some firm of consultants, I use that word advisedly, who would advise on things to do to improve your EPC,
Yeah.
the environmental energy performance certificate rate. And my house was used as a guinea pig. Right. It was not successful, I think is the polite term, but the idea was sound. Nothing wrong with the idea, but the firm of consultants were not up to the task.
Yeah.
There must be others out there. Have you any plans to start or restart the scheme?
Yeah, it's well, yes, I do remember. Firstly, delighted to see you. Thank you. We did also manage to get. I hope you've had your passbook updated, because we did get the printer specifically for you this evening. So fantastic on
Yes,
that.
I did. I have
Great.
actually thanked Denise.
Great.
She's
there. Yeah, she needs me fixed.
I sent an email.
Great. Thank you for that. So yes, we did indeed. We were looking at retrofit mortgages, whereby we would look at a lower rated EPC rated house. We would agree via the consultants, we provide the facility and lend to improve the efficiencies of those homes. Of course, it comes in a backdrop as Nemini positioned that interest rates have gone significantly higher, cost of living crisis, and frankly, across the market, and also the then Conservative government gave a very different view as to what was the sort of priority of a green agenda. We've frankly seen, and it's not just the same as ourselves, others, that firm that we've been dealing with, they have struggled to make the inroads that they perhaps seen, because frankly, spending money on things like air pumps, heat pumps, whatever it might be on it, is that the priority for people whilst their interest rates have gone higher? It frankly hasn't. And we still offer it. We actually have an award. We received an award for our green mortgages that we provide. But I can tell you in terms of overall success of those mortgages versus the day-to-day, it's very, very muted. We continue to look at it. I think, again, within the building society sector, we are well placed to help and support those. But generally, from a consumer uptake perspective, it's not what's important to people at this point in time. People are really focused upon keeping things cost effective.
Okay.
To give a second
Sure, I
question.
agree with you, but with more of that, I wanted it
Sure, please appreciate it.
a long time. Secondly, the £20,000 that you spent on rebranding, have you had any feedback that it has been successful? In other words, have people come back and said, "Oh, whoopee, we now with the new rebranding, this is the place to be"?
They
I
haven't
know
quite.
that's a bit facetious, but you understand the question.
I do understand the question, thankfully. Listen, I had 15 people contact us to say they didn't like the branding. So I showed you the members, the number 45,000, 6,000. So 15 people that said they didn't like it. Some of which were a couple of keyboard warriors. And actually for every single customer, I picked up the phone and said, thank you for the feedback. What is it that you didn't like? And a few people changed their opinion and said, actually, thank you very much. Others said it was a vanity project. Others said they don't like change. Throughout our history, we've had 7 rebrands that I think, looking at roughly about 7 rebrands. And it's my job to keep the place relevant. I wouldn't have signed off the rebrand for some of my competitors if it was hundreds of thousands of pounds. I wouldn't have wasted the members' money. But I had to spend money on updating the branches. I had to do it for digital. And it felt like at that point, the branding was a little bit tired. And as we were trying to appeal, and it was a new chapter for us, it felt right to do us. 20,000 was not a big outlay. And in fact, all the other places and the skills that we built in-house felt like a very good return for it. We've had good positive feedback from others that have made comment about it. But as I say, perhaps maybe they've taken your comment or your question the other way. We've had 15 people that haven't liked it, all of which have had a call from me. So can't please everybody all the time, but I personally feel like I'm very proud of what it looks like. It keeps us relevant for the future.
It's the trouble. You always get negative feedback rather than positive feedback, I suppose.
That's very true. Believe me, that is very true.
Thank you.
Do you anticipate any increase in the number of repossessions?
It's a good question. So I'll answer it in a slightly different way. So our arrears book, so people that were facing difficulty, facing challenges, you don't know the exact number off the top of your head, but it remained very, very low during, effectively the peak of the interest rate and where people were struggling with things. I think it's hard to say that in this year, at the start of this year, maybe without getting into geopolitics, we would expect more interest rate cuts. We've got a different agenda coming out of the US. We've got unrest in terms of what's happening with Ukraine, all of which puts some inflationary pressure and therefore keeping interest rates higher. That impacts people's pockets, impacts what their ability to do and make payments on stuff. From us personally, we think we're through the worst of that arrears position at this point. Our data would suggest that to us. But look, I think that it's going to be a continued pain in the market more generally, because I think interest rates will stay higher for longer. And I think what you'll find is that the level of what a new normal of base rates is not to where it's been over the past 10 years or so. So people will need to get used to there is a cost to borrowing money, and equally the benefit goes back to the savers as well. Do you want to just update and remember what's the spot now, the arrears numbers?
Well, so as at today, we've got 30, as at the end of February, rather, we have 37 customers in arrears, which is very similar to what it was all throughout last year. So it's been very, very stable. We haven't seen a big blip, at the peak of the interest rate. So, actually, we're very pleased at how the mortgage book has performed over that period.
There's just one further part on it, is just to emphasise the point. One of the roles and purposes of a building society, maybe a little bit cliche, but we shouldn't give you an umbrella and take it away when it's raining. Right? I mean, our job is to work with anybody that's in arrears to understand what we can get help and solutions. Mm-hmm. But actually, the point is, in terms of the assessing and providing mortgages to people in the first place, the risk that we take at the outset. We should only be providing mortgages to people that can afford them, that can absorb the shocks, and we lend to the right people. So it actually isn't any real surprise to me that we've got low levels of arrears. But I have, in those cases that we have been working with them, have been supporting with them and trying to find real solutions for them through what is pretty difficult financial circumstances for them.
Yeah. Well, thank you very much for such an interesting range of engaging questions, and we're absolutely delighted to have had a chance to answer those for you today. Unless there are any more, I will move now to the AGM results, if I may, Grace. Do you have the certificate of votes so I can share them with our members? Would you like to read them out yourself?
Well, I was just going to
Why didn't you read them out, Grace?
Well, I was going to the simple option
Yep.
and say that all votes have passed with the necessary majority, and a full breakdown will be provided on the website.
Perfect. That sounds good for me. Well, on that basis, it simply falls to me to offer my thanks to all in person for voting and for joining us this evening, and for those of you who might be watching this after the event. With there being no further business, I now declare our formal meeting closed. I mentioned earlier that we are now in our 160th year here at Hinckley Rugby, so please do look out for our celebration plans. And I very much hope to see as many of you as possible at next year's AGM. I wish you all a very pleasant evening, and to those of you who have travelled, I wish you a very safe journey home. Thank you for coming.